All right, perfect. So we're back right now. We had a few issues with the live session with my internet. Most likely, seems like my internet is not that interested in the person A, person B story. But anyway, to finish my story right here before I get interrupted again, is the person B right there is essentially they need to take a maximum of one loss before they actually take the winner, and that's with the same exact risk. That's with the same exact average RR as well. Because if that does not happen, then of course they're simply said they will be losing, and that's a simple math equation. Because then it's one RR you lose, 2 RR, you're still in the win. So if you take two losses right there, then it's not even a profitable situation anymore overall. So that's extremely important to understand that then it just becomes a simple logic where we want to take the most winners, but everyone can take the most winners, as in Twitter traders, Instagram traders, so, YouTube traders. They'll likely take a lot of winners, but it will stay with the winners. They won't show you the losses. And the goal in trading is not necessarily to have a lot of winners, of course, could be very nice, but usually that also comes at a cost where people take more losses, and we want to take as much, or we want to take minimum losses right there, to then eventually have the next winner, where from winner to winner, in between that period, usually a lot of people take quite a lot of losses, blowing the account, not even getting the chance to take a next trade. So that is very important to understand. So here, my situation is I want to wait for more confirmation if we do want to continue higher right there. In the meantime, I want to wait, and if we start creating new 4-hour value gaps right there, continuing lower, and we respect those, then I still want to look at those lows to target as well. So going over the other pairs that we were talking about, EU, for example, right here, same situation. I want to wait. And in the meantime, if we get new 4-hour value gaps higher right there, then those highs are looking very nice to target, actually. Let's see. We could get a daily ST off of the monthly value gap on dollar. Exactly. And that worries me as well a lot, right? When we get a daily ST lower right there and continuing lower, actually. And if that is confirmed as well tomorrow, then that is a great sign that we do indeed want to continue lower. And then it all stacks up. We have a sharp turn, early sharp turn. We start disrespecting the fair value area right there. Then we can confidently say that we might be in for a very nice trade opportunity to continue lower as well. All right, on GU right here. GU is a bit in no man's land. And the reason I say that is because a lot of pairs right there, EU, AU, took out lows right there to sweep them to then continue higher potentially. Where GU right here is just quite strong. So it's not below those lows. It's not inside that monthly value gap right there. So here I would want to wait a little bit longer right there and not necessarily do anything. Want to wait still. And that goes back to all the other pairs that we have right here. New Zealand dollar, US dollar, Canadian dollar, US dollar, Canadian dollar right there, US dollar CHF as well, and US dollar JPY, the exact same thing. I would want to wait right here until, again, the dollar clears up. And that's why in the forecast, I mentioned the Forex majors right there potentially being nice, but overall, I believe I mentioned, what was it, after CPI setup, it was just not super clear to me, as in it was quite 50-50 to me. I did not fully see the high probability conditions right there that we might have, purely because this definitely could still happen right there, and running into that weekly order block was definitely something that was quite odd. I was person B for GU, one trade at least, even we had a 1 hour out of 4 hour, 50 minutes out of 1 hour. Yeah, it's all right. I mean, one trade, of course, to test sort of the waters is not that crazy. As long as we understand, then we need to back that up with ideally a winning trade. And if we sort of keep on testing that constantly, we always test the waters, then we are always in 1% drawdown constantly, all the time. And that adds up a lot, of course. Let me see. Been on the sidelines all week though. I called out disrespect yesterday. Yeah, I've also been on the sidelines a lot, and especially for Delirium trading plan for myself, where it's just Forex, filtering process trading plan, essentially been on the sidelines a lot because the conditions just haven't been superb throughout the year, throughout this week especially, of course. So I've been leaning more to futures as well a little bit. Let me see. And of course, for flow trading plan, it's a different story because I do think this is tradable for flow trading plan right here. And well, is it? I say that very easily whilst not trading the flow trading plan for Forex. So for me, it's easy to talk right there. But there is, of course, a little bit more opportunities overall. For gold, silver right here is not that interesting to me. Again, I just think it's going back to sequence short conditions. Gold right here, this is definitely quite an interesting zone right there. But if we are then disrespecting everything on the dollar, then what will gold do? It will fully disrespect this low, fully disrespect FVG gap right there and just continue higher. So it all comes back together where if the dollar is just not clear right there, then, well, it also becomes quite easy to tell you when you should get involved and when you should not get involved. Because if the dollar is not clear right there, perfect. Then we just simply wait. Then Bitcoin right here, continuing higher. And Bitcoin is just doing its thing. Just overall quite interesting how it is continuing higher and very strong, moving towards potential all-time highs as well. Very interesting. Very interesting. Crude oil. This was one I actually wanted to look at right here. Before I do that, let me go over some questions as well. What do you think of GBP JPY for shorts? Let's look at that then really quick. Let's see. GBP JPY shorts right here. Oh, okay. All right. Well, the thing I see here is that it's the same situation for that sweep versus run on liquidity. This is again, to me, indicates that we are likely sweeping the liquidity. And that is seen by not closing comfortably above those highs. Again, respecting those premium rates by having those huge down candles, which potentially create a sharp turn. So here, do we continue lower all the way towards that low? I'm not sure. We might just reject still and continue higher here. But this low might be quite a nice target. So on the 4 hour right here, if we can find some usual context, targeting that unusual context right there, that could be quite interesting to follow through and have a quick short trade. So a very short scalp, that could be quite nice as well. Yeah, low hanging fruit is drawn liquidity. Exactly. A very short trade right there could be very nice. Let's see. Gold's been really heavy. S&D, yeah, 100%. It's been crazy, to be honest. Imagine when the high probability conditions come, MT will have prop firms push back into their seats. Well, we're prepared for those high probability conditions again. That would be very nice. And in the meantime as well, yeah, it's quite important. It's a lot of experience though. It's a lot of experience. I think flow traders have been excelling recently, as in from what I'm seeing as well in the MMT a little bit. The flow traders have been excelling a little bit more than filtering process traders. But it's also not that crazy seeing the conditions we had. Let's see. Australian dollar, Canadian dollar tapped in weekly fair value gap. Let's see. Let us see. All right. So coming off of that overall weekly breaker, weekly fair value gap as well, into this weekly fair value gap right there. That's quite interesting. That's quite interesting. And here it would be interesting to see what we actually want to do. If we want to continue lower right there, or we actually want to continue higher off the weekly area that we had, this gray box right there. So in the meantime, I would also want to wait for that right there, seeing what we want to do overall. Let me go over crude oil again, right there. So crude oil, let me see. On the daily, we've just been messing around quite a lot, and it's not sure what the drawn liquidity is right here. I do still think we can continue higher, but overall, we did not create a new daily fair value gap right there, which also worries me a little bit. 4 hour huge rejection lower, no fair value gaps or anything. So that again leads to the unusual context that we might have right there, which we can reach by this 4 hour fair value gap right there, which we had a nice rejection of that, continuing lower potentially. Then on the 15 minute, we had quite a big retracement, which again is just not that nice. And what I'm trying to tell you right there is that when we come into this 4 hour fair value gap right there, we have a move higher like this, and we have a move lower. and we are close to the drawn liquidity, which is this line right there. Then this area overall, this area is again what we refer to as the fair value area, as in this case a breaker block right there on the 15-minute. Now that breaker block, that fair value area, to sum it up more easily right there, ideally what we want to see when we come below that is a 15-minute fair value gap, so on the same time frame right there, a 15-minute fair value gap exactly overlapping with the lows, because that again is that area that we can then continue lower from. And that also leads to, again, refining the area that we can continue lower from, because right here, when we then start to continue higher, we start to create a 15-minute bullish fair value gap. That to me does not make sense, and that to me indicates right there that price actually wants to continue higher, because again, it's offering fair value price or it is seeking liquidity. And here, the only place it can offer fair value is below those lows. So this area right there, that's where it can offer fair value. And that is where ideally it should then continue lower from. So here it's not offering fair value anymore. It is seeking liquidity in the form of every high that we have, and eventually this high right there. So this is where, if you are a flow trader, there is a lot of opportunities throughout the day as well, looking at EU, GU, whatever it may be, where this actually is really interesting right here to catch this last part of the move right there. So let's see what we want to do actually right there. This is what I like to call that no resistance run, or as you may know it, the low resistance liquidity run. It's just for me the no resistance run right there, because that happens quite fast. There's nothing holding price back anymore from reaching those highs besides just the high itself. So that is quite interesting right here, where again it's the same situation. If we do retrace, then the retracement should not be deep right there. We trace into that area for value gap right there to potentially continue higher off of that as well. That is quite interesting. There it is. There it is. And then right there, we can just look to continue higher overall. Then when we continue higher, it's the same story. It's constantly the same cycle. As in right here, when we then want to continue higher, well, what happened here? Well, now we created this fair value area right there. So what do we want to see? Well, ideally, we want to see right here a 15-minute fair value gap or a 5-minute fair value gap. Again, this is where it's a little bit more difficult, because now you are looking at a 5-minute fair value gap potentially, which eventually turns into a 15-minute fair value gap, which eventually might even turn into a 1-hour fair value gap right there. So we need to take into account all of those. And then we can just simply look to target the next premium raise. So we were not respecting that 4-hour fair value gap. Perfect. This 4-hour fair value gap right there is actually the next premium raise. That can be the next target. On the 1 hour, we are running into this order block right there. All right, so how can we go about this? Well, we might create the fair value area right there with the fair value gap exactly overlap with the highs. Then we might reject a little bit here off that 1 hour order block. That's also why I would not want to long again above this high right there. So either it's I long below that high and catch the last move, and I let one run if I'm already in a position, but I'm not adding into a new position right there above that high. Because here we might reject and we might just continue lower like this. It's the more risky buy right there, because you can't get the accuracy that we can right there. But if we do retrace and we have a nice fair value area right there, then we can definitely look to continue higher off that to then target again that premium array sitting right there. And the reason we have been so focused on those rejections that we are seeing right there and playing with those rejections, waiting for the rejection to happen right there, to then look to get involved again. That is because price action itself, the market moves from premium to discount rate, from discount rate to premium rate. So it's something we mentioned early on in very early enrollments actually, which are still on the older website, where order flow is the movement from premium to discount rate and from discount rate to premium rate. So the constant ping pong between those, ping pong between those, ping pong between those. And that is because there are offloading orders right there and there are new orders coming into the market. We just need to understand where are the overall new orders coming into the market and where are old orders that are not significant anymore getting offloaded because they are not relevant anymore. We need to find where the majority of people or the majority of the banks, of the institutions, are looking to create new orders to look to get involved again. That's the whole theory behind it. And that is why when we reject off of this is not a rejection to potentially continue lower unless we start sweeping those highs, because then we can confidently say that is the confluence, the signs we have established to understand that is not offloading orders, that is adding new orders to continue lower. Where if we start to close above this high with fair value area, then we can confidently say this area is not to continue lower from, to add positions, it's to offload positions, to get out of the position right there. So right here, that is where then this fair value area with the fair value gap is not to offload positions, it's to add on to positions when we come into that. So it's always a question between that. That is very important to understand, where this is a very interesting situation right here. We had a little bit of a clean move right there. That's what I've been doing for futures a lot, which is also what I've been doing yesterday, waiting for every rejection right there to play out and then just catch those last moves right there with just a shitload of minis. And the reason I say that is because right here, if I add on to this position right here, then I can also confidently say very quick when I'm wrong. And I'm quick, very wrong right there if we have any sort of retracement. So I can get out very quick and minimize my overall risk. So that's very nice, very interesting. All right, let's see. New Zealand dollar CHF 50-minute fair value gap that has just been created looks good to me. Let me see. New Zealand dollar CHF. Let me start from top again. I moved to the breakdown list, and this is this one where we are looking to continue higher above the previous month's high right there, continuing higher off of the daily right there. The thing I did not like was that we did not create a daily fair value gap right there. Then the 4 hour was also became very vague. As in the 4 hour, all right, what do we actually want to continue higher from? We already came into this area right there and we failed to continue higher right there a couple of times. Then we have a bigger retracement right here coming into this order block right there, which we can again continue higher from potentially. Let's see what we are doing on the lower time frame. And the thing here is, and the reason why I most of the time mention, if the higher time frame is not that clean, then I just stop trading it. As in filtering process wise, I just stop trading it right there. This can definitely continue higher, don't get me wrong. But if we need to create a good trade ID from the lower time frame, then that's not a great trade ID. And the reason for that is because the lower time frame is always going to be clean. On every single one of these pairs right here, I can show you that we have 50-minute fair value gaps going higher, lower, etc. So it's always going to be clean in that sense. Now, that doesn't matter, or that doesn't say that you can't take this trade right here. Don't get me wrong. It's just how I feel about it right there and my experience overall. But if we get 50-minute fair value gaps higher right there, then this is on the 15-minute. Yes, I can't deny on the 15-minute, this is 100% looking like a great setup. But again, the differentiator right there is what is actually the higher time frame doing right there, because I can also see that we tried to push higher a little bit right there, which we failed to do so. That's all things that we need to take into account as well. But 15-minute wise, 100% agree. 100% agree. That is definitely looking quite nice right there. Let me see. Euro CHF bulky turn in the daily fair value gap. Let me see. And an approach here could as well be, if you do want to enter this and you're not too certain about the higher time frame, then take lower risk, for example. That is exactly where that does require more experience though. And that's the reason I say that is because when you just start out in trading in these situations where you have high probability versus low probability, you might not be able to differentiate them very well. Where with my experience, of course, in all my humble opinion, I can differentiate them quite well just by looking at it over and over and over. So here, for example, this would still be a trade ID for me. The only thing is I would risk a lot less on it because I'm not too certain on what it actually wants to do. So that could be an approach, but again, that does require a little bit more experience, because if you then mess that up, as in you can't differentiate the high probability from low probability very well just yet, then you could be stuck in a break-even cycle for a very long time. Let me see. Euro CHF. Euro. Oh, that is a very bulky turn right there. Yes, indeed, a very bulky turn. Euro CHF this is extremely clean to me, as in the higher time from here is extremely clean to me, and it's funny how that works, because on New Zealand dollar CHF, the higher time frame was not that clean to me, and whenever the higher time frame is cleaner than the lower time frame, I would still somewhat prefer to take a trade if it does present, if that makes sense. And the reason for that is because if the higher time frame follows through here, then again, the higher time frame is just extremely clean. But having a bulky turn right there, this is not necessarily something I would want to get involved in just yet. If it's already almost struggling, it is struggling to get back above the daily FVG gap, which is a great indication if we do want to continue higher right there. If you're not sure, if we do want to continue higher and we are inside the daily FVG gap, well, in an example like this, then why not wait for it to displace above that daily FVG gap high right there, going back above it to then potentially continue higher off of that right there. So we can just simply wait as well. And it's getting quite late for Euro CHF. So if anything, I would want to look to potentially get involved tomorrow, not necessarily today anymore. Because it already had its chance during London, etc. Euro CHF, of course, being a major London pair, where both currencies are essentially London majors. That's very important to understand as well. It's a soft turn, exactly. Yeah, a soft turn. It's actually a good one. Need to change it to a soft turn. I'm looking up the economic calendar actually to get a better idea of what we can expect really quick. Let me see. What do we have for the remainder of today? Some US dollar, but it's orange news. It's not super interesting. FOMC member speaking orange. Mwah. As well, not super interesting. For tomorrow, we have GBP red news, US dollar PPI. Then we have US dollar consumer sentiment as well. All right. Well, there's not a lot of news left, actually. Not a lot of news left. So that for me would also indicate that I do not want to trade Euro CHF anymore right there for tomorrow. Right there. And even today. So for me, this would be over right there. Let's see. Where was I actually? When price seems to respect a fair value area but does not create an overlapping gap. Would that be interesting for filtering process or only hybrid models such as we are seeing on New Zealand dollar JPY to continue higher? Let's see. This is the one on the daily where we mentioned it, right? Yes, okay, perfect. Yes. So this right here is also quite interesting, because there's two thought processes here, and we need to dive into the basics again to fully understand this. And this is actually something, well, you touched on, or the question is really good because you touched on a topic that we are going to dive very deep into, the spring enrollment, which we haven't done just yet, actually. And the topic here the story starts off with understanding two types or two forms of how the market actually moves. And that is, again, seeking liquidity, or it is offering fair value. So we're either doing one of those two right there. We're either offering fair value or we are seeking liquidity. And at this moment in time, when we have this sweep right here of that potential high, so this sweep of this high right there, and we are coming above this high right there, and if we do want to sweep this liquidity right there, and we want to continue lower to target lower liquidity in the form of opposing liquidity in the form of these swing lows all the way lower right there, then we should not come back above those high. We should never be comfortable above a high if we are sweeping that high. Price is wants to continue lower immediately. So right here, if we want to offer fair value, then that's also a little bit worrying here, because we don't have a fair value gap immediately closing above this high right there and exactly overlapping with this high right there. That already would then remove any doubt we might have that we might be sweeping that high. Because if we have a fair value gap closing above it right there, then likely we are not sweeping it just yet. Unless we, like we're seeing on the dollar, we are not respecting that fair value area. Then again, that's another boundary that we can continue lower. But right here, we have a double situation. And yes, we can still continue higher right here. But the reason I did not want to take the trade is because when we then want to continue higher and we are respecting a premium array like this, we are likely going to have an extremely ugly confirmation on the lower time frame right there. We might have an extremely big retracement continuing lower a little bit to then continue higher. And that is not the situation that we want to look at if you do want to look at a 50-minute ST plus RE, for example. Where here it becomes the same story about that person A, person B, where yes, you can catch this move right here higher. If you're person B, you likely got involved, but you likely got involved so many times right there that you also caught a few losses before you actually catch the winner. So then you might even, when you catch that winner, it might seem like a great winner, but overall in the bigger scheme of things, it's just an overall break even to get you back to break even whilst you took 2 losses right there. So what do? Well, you wait for extra confirmation, and the extra confirmation here can be in the term of 4 alpha value gaps, but as well can be in the terms of this line that we are seeing right there. And why this line right there? Because when we come into this fair value area and we want to continue higher, then the method on how we can see that we are offering fair value and not seeking liquidity anymore is by invalidating this liquidity right there. Because if we want to continue lower right here and we are sweeping this liquidity, we should again suffocate that liquidity. We should not be comfortable above that high, meaning we should already continue lower, disrespect these fair value gaps right there to continue lower off that. So when we then come into those daily fair value gaps right there and we come back above this line, that invalidates the liquidity theory that we had. So that then becomes, all right, well, we might actually want to continue higher instead. So right here on the 4 hour, that is where eventually you can then look at higher prices overall if we get those. Again, the overall delivery right there, that's another discussion which I don't like. But yes, I do think this can continue higher, just simply said by how comfortable it is getting and closing above those highs right there, if that makes sense. And if we are talking about filtering process, could this be nice? Well, I think the drawn liquidity is quite clear. But for filtering process, it's also taking into account, can we minimize those losses again before we actually take that winner? So even though the drawn liquidity right here is quite nice, the overall delivery just hasn't been quite nice. So how can we guarantee right there that the delivery is going to be nice? Well, simply we can't, because we have been disrespecting fair value gaps, even order blocks right there, to then all of a sudden continue higher again. So it's been a very weird delivery overall. So for filtering process, if this was the only pair that we had, which was quite high probability, yes, I would trade it. But if we also have other pairs that are also high probability, then it becomes an interest list right there, and then we would have to see which one is actually more interesting, which there is potentially something more interesting right here for a filtering process as well. GB Canadian dollar nice for short. If we came to the 4 hour value gap, just create a closer target. Let me see. GB Canadian dollar. It's been a bit all over the place right here, but yes and no. Let me see. Oh, we are coming off a weekly value gap. The thing right here is we are coming off that weekly value gap, weekly order block. Actually, I did not see that actually. That's quite interesting. And then we have weekly value gap as well. So currently we are still in that 50-50 area overall. If we do want to continue higher right here, then again, we see that weird price action. If we want to continue lower, then we have a beautiful ST right there. Beautiful 4 hour value gap lower as well. But that then leads me to, we are in a 50-50 area right there, where we are in trapped order flow essentially right there. So that's not necessarily something where I would actively want to look for a trade. I would prefer it when we then continue lower already right there below those lows right there, continue lower, if that makes sense. But it is quite interesting, definitely. Let me see. Gold's creating a 4 hour value gap. Heading into the daily value gap, and order flow is currently being confirmed by having a 15-minute bullish value gaps created. We're dropping to the 1 minute and looking for an ST plus read would be optimal. Let me see. Yeah, so we talked about this fair value area right there, but it's not aligning with the dollar right there. So the 4 hour fair value gaps as well, 15 minute right there, 15 minute fair value gaps right there. It's a dangerous place, let me put it that way. And the reason I say that is because if we want to continue lower and all of a sudden we have a rejection lower right there, then what happens? Then we fully disrespect most likely that 50 minute fair value gap right there. So it's a dangerous place to get involved in. But what you would want to do right here, and the way I would want to approach this, is stick with me, because this is going to be quite difficult to understand if we do not understand the overall theory behind it. Right here, if we come into this 50 minutes fair value gap right there, or any 50 minutes fair value gap, and we want to look for longs, then a 1 minute ST plus re would be great. Would be great if we do not have any resistance on the left. So let's say we did not have any daily fair value gap, any daily fair value area right there that we can potentially reject off of. Then the 1 minute ST plus re would be great, because then there's almost no probability telling us that we might actually want to continue lower and disrespect that 50 minute fair value gap right there. Whilst currently we do have that. So how do we approach that? Well, here, once we come into this 50 minute fair value gap and we dive into the 1 minute right there, we will undoubtedly create bearish fair value gaps right there coming into that, bearish order blocks coming into that, premium arrays in that leg coming into this 50 minute fair value gap right there. So how do we know if it wants to continue higher? Well, first instance, yes, 1 minute ST plus read, that's already great. But by the time we have that 1 minute ST plus read, we likely have some order blocks still right there. We likely have some fair value gaps still that might be in the leg, which we can reject lower off of. So here, if we then reject off of every possible premium raise before we arrive only at swing highs, and we only have swing highs left, then right there, eventually we will arrive at the no resistance run right there, where this is, for example, the last rejection we get off of. Might be a breaker. Who knows what it can be right there if we even come into the 50 minutes fair value gap. Then in that leg itself right here, this rejection leg lower right there, we might also have a fair value gap lower. So that is where you wait a little bit, and then 1 minute fair value gap higher right there, boom, that is extremely high probability to then get involved, because then we can calmly say there are only probabilities supporting the idea that we actually want to continue higher right there. Requires a little bit more confirmation, of course, but it is definitely higher probability. And that is something I did yesterday on NASDAQ right there. Let me show you. Let me show you right here, which was right here. It was also 50 minute ST plus read, by the way. So it's seeing through two lenses essentially and getting to the same outcome. But the 15 minute right there, and then a 1 minute ST plus read. So let me see. Running into a 4 hour fair value gap right there. That's why I wanted a little bit more confirmation as well. So right here, we have the ST continuing lower. We get the rejection of the order block right there on the 1 minute. And again, it's not an order block that I want to trade off of. I don't want to do anything with that. And all I'm waiting for here is, again, a new fair value gap lower right there to potentially get involved. But specifically, and paying attention to the details, I am waiting for every discount rate that might be in this leg higher right here to already have a rejection, to have a potential retracement like we're seeing right there. So I know there is zero probability, well, close to zero probability, of course. It's never zero, but it's close to zero probability that we will have any rejection again. So if I'm wrong right there, then I'm just wrong on the whole idea. If I'm right there, then the price action will deliver most likely extremely fast, which is where eventually you can just execute on that. So this is very similar to gold at this moment in time. That's exactly how I would want to go about that. Let me see. So this definitely, by the way, just to go over this again, could definitely be quite interesting. Just knowing if we want to trade the highest probability, how to approach that right there. Let's keep an eye on it. Let's keep an eye on it right there. Could be very interesting. DXY going back into the range again. Yeah, it will be very interesting. Although I do not think a dollar right here is heading back to the range. I think if the dollar right here is continuing lower, it's not there to consolidate anymore. It is there to target liquidity right now. But again, I say that in good hopes, where we might just consolidate, of course. Who knows? Who knows? Who knows? Exactly. Lower price, nowhere fair value to be had. Just dump down, please. Exactly. That could be very nice again. And the ideal scenario is if we do continue lower right here, because then we of course have a lot of context to potentially deal with it. At least we can play a rejection right there. Let's see. I have a question about time. For example, on GBP JPY or GBP Canadian dollar, we could go lower off the 4-hour fair value gap, and target is so close, but it's quite late to trade GBP. Then we have news supporting the ID tomorrow. What would you do if you get the setup out of kill zone? Would you take the trade or would you still wait tomorrow? Let me see. It really depends. And I can already answer it without looking at the chart, by the way. Because for GBP Canadian dollar, I would not want to enter. And the reason for that is because GBP is London, like you mentioned, right? It's mainly London. So for GBP, it is late to trade during the day. So then we have to take into account the second part of the ticker, which is JPY and Canadian dollar. Canadian dollar is mainly New York. So for New York, it is also, well, not late, but it's not going to carry that volatility through Asia. Where then in Asia, it just stalls or just does something weird, etc. And just does something that I would not like. For GBP JPY, if we get the setup right there, then that could definitely be something where if you are willing to hold, then that could be very interesting. Then it becomes a question as well. Do we have news supporting the ID tomorrow? Which you mentioned, we have GBP news supporting the ID tomorrow. So that definitely is quite interesting then to then already look for an entry, where the way I always view it is I view it as a video game. I'm not sure if you have played a video game where you need boosts to get to the next stage, sort of. Where in between you have, right here, you get a boost right there, and now you don't have a boost and you wait for the new boost to arrive, sort of. So it stalls right there, it consolidates, and if you get the next boost tomorrow, then you can still ride that wave of the next boost. So it's waiting for the next boost, and the next boost right there, and what I'm referring to as in boost is again that volatility, is that time aspect, which in this case is GBP tomorrow morning. So if we have that boost tomorrow morning, then if we already have a setup right there, and it is an Asia major, which is very important because otherwise I would not take the trade, then right there, that could definitely be quite interesting. But then the next boundary is again, if that's only a 5-minute ST plus re, that for me would not be enough, because then you have market rollover right there. Then we also create all sorts of problems that we do not want to get involved in. If we get a 15-minute ST already lower, that's a bit more interesting. If we already get a 1-hour backup lower as well, that's definitely very interesting. But the lower we go right there, the more we have to take into account the lack of volatility that we are about to create and the rollover, etc. So then it becomes the question, from one boost to the other boost, can you survive this area right here before we arrive at the next boost, which is Asia, which is market rollover. If it's an Asia major, which GBP JPY is, then yes, it already has more odds of surviving the Asia session because it's not likely to consolidate, etc. It will likely still have some movement. Then the only thing you need to take into account is the market rollover, which is quite important. Where do you have your stop loss at that moment in time? So yeah, there's a lot of things going into it. To answer your question clearly, it's GBP Canadian dollar, I would wait for tomorrow. GBP JPY, unless we get a very clear 15-minute ST lower and potentially 15-minute ST plus re and not 5-minute, I would also want to wait for tomorrow. And if it's a 1-hour setup already, then that could be very interesting. The best thing to do, if you want to be certain, is waiting for tomorrow. AR, can you share your thoughts on Australian dollar JPY and that setup on the 50-minute trading H4 unusual context? Let's see. That looks very interesting by the chart you sent. Let me see. On the daily right here, not the nicest price action overall, but I saw that you mentioned 4-hour unusual context right here. Unique, from what I've been seeing, you have been doing very well in that hybrid model. really well, extremely well. And it's you're actually a perfect example of a hybrid model. You've been doing really well in that aspect. And what I mean by that is that this overall is initially might be a filtering process trade ID, but filtering process, I would argue, is not that clean enough. So for a hybrid model where we now incorporate the flow trading plan as well a little bit, the drawn liquidity is still quite clear, right? So we can definitely still look to capitalize on that, where we have 4 alpha values right there. We never have arguments for the bearish sides until we create this bearish fair value gap right there, which then also creates a lack of a daily fair value gap higher being created. All right, interesting. So right there, we need to wait for that rejection. If we want to continue lower, then this right here should have followed through lower. So this is a absolutely, wow, this is a beautiful trade on your side. And it's almost, well, fully breakdown worthy right here for the whole mentorship, because this is absolutely beautiful. And I want to break this down fully. It's a great trade. It's absolutely a really good trade. It's a really good trade. I'm quite impressed, actually. It's a really good trade. So if we want to continue higher, well, if we want to continue lower, let's put it that way. If we want to continue lower, then we will continue lower off that 4 hour value gap right there, which means that at this moment in time, right here, this next candle should continue lower, should be a down candle. So when this doesn't, when the next candle is not a down candle and it starts to expand higher, then if we come above this high right there, that indicates to us that we are not rejecting off that 4 hour value gap. It's not strong enough, which again is on the lower time frame seen by just a visual rejection, more easily understandable right there. We have a rejection right there, which fails to follow through lower. Perfect. So these highs right there, once we come above them and we create fair value gaps, then we have a fair value area being created with a fair value gap, which means at that moment in time, what are we doing? We are running that liquidity and not sweeping that liquidity. So this is, wow, that's a beautiful setup actually right there. That's beautiful. Yes, 100%. That's beautiful. That's exactly what we've been touching on as well. That's very beautiful. I like that a lot. Thank you for sharing that as well. There's a glitch on the daily Australian dollar JPY. Yeah, I'm not sure if is it my broker. I see that quite often, and it is quite annoying, to be honest with you, because it messes up on what we're actually looking at overall. Right there, yeah, that daily value gap, and then this daily value gap fills right there. So overall, we can still reach those highs right there. So yeah, that's very interesting. Very interesting. Let me see. It happens quite a lot on forex.com, which usually when I try to replay tool, then it disappears, but not always. No, not anymore. Not anymore. Quite annoying if I am being honest. But anyway, it doesn't really matter. Usually I always remember if there was a daily value gap or wasn't. So it's all right. It's all right. This is quite interesting. I want to see, definitely want to keep an eye on this, how it plays out. Very interesting. And I was saying a lot of JPY, so it definitely has some momentum going into Asia session as well. So we can expect some movement. And this is the same situation right here. This is an order block, breaker block, whatever you want to call it. It's a fair value area. We are going to reject off of that right there. So, well, reject as in, do I expect lower prices? No, but we are going to have some form of rejection. So right here, we are seeing that rejection right now with the previous candle right there. The same situation is just fractal right now, where if we trade back above that high right there, and the odds that we will now seek this high right there as a liquidity have been increased by a lot. Which again, if we go into the lower time frame, we can visually see by this rejection that we have right there, which is very, very interesting as well. Very interesting. Like this a lot. All right, let's look at some pairs right here. Okay. So this is quite interesting. And this is also something I mentioned on Bitcoin actually. And what I mentioned on Bitcoin was the following. When we create a fair value area right there, ideally we want to see a fair value gap perfectly overlapping with that fair value area. So with the high that we just took. So on crude oil, that would look like a fair value gap exactly overlapping with this high right there. That's the ideal scenario. But right here, we can also see this down candle right there, which actually prevents a 50-minute fair value from being created right there and coming into the fair value area. And that's the same thing we see on Bitcoin right there on the daily time frame. Right there, the same sort of candle. And at that moment in time in the forecast I mentioned, and the reason I mentioned that is I do think we can already continue higher and not necessarily expect a sweep. Because again, that's when we have to take into account, all right, what is a sweep actually? A sweep is an aggressive move above a high to continue lower right there. So based on candle science, we are seeing, and it's the same with the variation breakaway gap and all that stuff, where if we want to know if we are trading into a fair value gap, we want to pay attention to that third candle. Well, here the third candle is not necessarily interesting for a fair value gap, but it is interesting to tell us if we already want to continue higher, because here this does not show any signs of sweeping. This is such a high close relatively seen to the wick right there that we can confidently say we are rejecting off of something, of the 4-hour fair value area with the fair value gap right there. So we are already rejecting right there, continuing higher. So here, finding any fair value gap that we already want to continue higher off of is exactly the trade that I would be interested in right there. And it's very similar to crude oil right here, very similar. And it's again, running into that 1-hour order block right there. Can we continue higher or will we continue lower from there? Now right here, we are failing to create that fair value area, but we do have a displacement already with the next target potentially being this high. So on the 5-minute right here, what are we seeing? No fair value, but we are seeing again that fair value area and why it is already rejecting. So we can have a logical reason why this is already continuing higher, because the 5-minute fair value area with the 5-minute fair value gap right there. On the 1 minute right there, we have beautiful 1 minute fair value gap right there. We have the order block as well, which we can continue higher from potentially. Ideally, next few candles right there, we want to see higher price because this is already rejecting right there. It's having that last rejection before potentially right here, having the no resistance run higher. The no resistance run is the best when you have one up candle already, one confident up candle where you can already see it wants to actually push higher right there. But currently it's a little bit in between. It's not confidently pushing higher, but I do still think this can definitely reach those highs right there. That is very nice actually. Still equal highs, almost. Let me see. Another question about my last question. You said that we may have second boost tomorrow with GP news, but my fear is that I can't get a setup with filtering process. I'm a filtering process trader. Because maybe before we create a 4-hour value gap that we can go lower off of, we already hit the target and then miss the trade. What would you advise to do? Yeah, that's a great question. That's a great question. And what I would do in that situation is I would switch more so to a hybrid. And what I mean by that is when we continue lower here, well, I would not even want to see a new fair value gap before we reach those lows right there. So before we reach those lows, and if we do want to reach those lows, then the chances of getting a new fair value gap for our value gap, yeah, that's very, very, very minimal. So right here, we can of course see by the 1 hour and the 15 minutes of this order block right there, whenever we decide to potentially start continuing lower. 1 hour value gaps lower right there to continue lower off of that instead. Right there, where you can still wait for your 5-minute ST plus read. It would just be a little bit more different, and which could also be nice because then you're getting just the extra confirmation that we actually do want to still continue lower. So that is how I would advise to go about it, which becomes more of a hybrid. So if you're not comfortable with that just yet, then I would also say, all right, then just sit it out and wait, or study it and see how you could potentially get involved, which is why with the trade Unique sent right there a little bit higher, that's a perfect hybrid model because you're quite confident about draw liquidity, and so you find clarity on the lower time frames, which a filtering process is not finding clarity on the lower time frames. It is finding clarity on the higher time frames and waiting for the absolute highest probability thing to happen. Flow trading plan is finding clarity on the lower time frame, which makes it a higher probability for that exact trade to play out. So it would be that. It would be waiting for 1 hour to continue lower right there, or 15 minutes even to continue lower off that, instead of the 4-hour value gap. Do you check out Ford by any chance? Let me see, Ford. Let me see. Let me see. I have not checked that out in a long time, actually. All right. What are we doing? What are we doing right here? Oh, this is an interesting chart, actually. Quite an interesting chart. And we're looking at the right Ford. Ford Industries. Let me see. Ford Motor, I imagine, or Ford itself. Ford Industries. Which one? I imagine Ford Motor, but I'm not too sure. Yeah, okay. Ford Motor, yeah. All right, let's see. Let's see. This is a little bit better to deal with. Let's see right here. So we had a bearish FVG gap sitting right there, which we could continue lower off of, which we are fully disrespecting as well. We did not create a bullish one for FVG gap, which is a bit of a shame. It's something I do not necessarily like. I would love to see that bullish FVG gap. We're also currently sweeping that high right there. So overall, the probabilities right there is still telling me, well, we might want to continue lower a little bit, unless we get nice signs that we actually want to continue higher. And those signs can be, for example, right here, this fair value area is, again, very important. Do we already want to continue higher right there? The gap that we're seeing overlapping with the daily fair value area, for me, is just a fair value gap. So if we want to continue higher, then this would be the area for me that we actually want to continue higher off of, and where I would already want to see higher prices. The last resort being potentially a weekly fair value gap, but I would ideally want to already see a close above this high right there going into next week. That would be very nice. Then it would become, again, a similar situation that we had on crude oil right there with the 15-minute right there with this sort of candle. Ideally, if the weekly candle closes like this that week on Ford, then that is exactly what I would be interested in. No, not this one. This one right here. So that would require a close above that high right there, which could be interesting. So overall, signs that we want to continue higher are there, as in it's getting there, but we need a little bit more right there. But we can potentially look to overall longer term as well continue higher right here. That's quite interesting. I do quite like this. Could be a nice long-term investment opportunity. Could be nice, actually. The 50-minute turn in Nasdaq of the daily fair value can be categorized as bulky ST if the current expansion candle creates another 50-minute fair value gap. Bit strange, however, that ES and Nasdaq diverges so much. Usually when that is the case, when ES and Nasdaq diverge so much, it's something is happening on the underlying. And I do not mean SMT. I'm not referring to SMT that much. But I'm referring to we might see a major move happen. And that is very important. So right here is the same situation still. So we talked about this. Let me see Nasdaq and ES right there as well. Oh, it's quite interesting, actually. Quite interesting. I see what you mean right now. All right, so what I want to see right here is either we continue lower off that daily fair value right there, or we continue higher off the previous week low of the weekly, and we just displace higher. So then it becomes a matter of waiting for the rejection on either side. So right here, this indeed, I would argue, is a very bulky turn right there. With news, we did create the high right there, which we can potentially continue lower off of. So that's quite nice. So let's actually see what is holding price back right here from potentially failing to continue lower. Do we have something on the 1 hour? Well, 1 hour for Vega, but those already have been mitigated. So then it becomes the low right there. It's the only thing we really have, which I would argue if we get a 15-minute for Vega right there below this low right there, then we can definitely look to potentially continue lower. Unless we again get those 15-minute for Vega gaps above these highs right there, then I would say we are continuing higher. It's just important to understand this 50-50 area right there, which on ES is completely different. Because here we are again in, and it's more clearly as well, to be honest, because we have a fair value gap going into that daily fair value gap right there more clearly. Daily fair value gap, 4 hour fair value gap right there. It's easier to understand the 50-50 area right here, because this just is the 50-50 area right there. So here it's waiting for either 15 minutes fair value gap below those lows or above those highs right there. and then continuing whatever it wants to do right there. So it's a little bit easier than NASDAQ currently. But with NASDAQ, I would then compare this low because I feel like it can reach this low. And if it reaches that low, it's going to sweep it if it wants to continue higher right there. And if it wants to continue lower, it will comfortably close below that low right there and create a 50-minute fair value gap below that low to continue lower off that. So this would be a very important swing low for me. And if we do not reach that and we already get 50-minute fair value gaps higher right there without creating 50-minute fair value gaps lower, again, that already tells us a lot as well. Yeah, it's very interesting. It's very interesting. Very interesting price action. Let me see. A 50-minute fair value gap like this would not be enough for me. I would want a little bit more. Ideally, coming above those highs right there. Just a 50-minute fair value gap like this is not enough for me right there. I will continue to upload more trade recaps from your future trading. Yes, for sure. 100%. And I've actually been working on a Forex to futures guide. And that's what I wanted to go over in the next trade recap, where I can actually go over the trade recaps or the trades that I took today. A little update as well. I have currently, let me see, yesterday I took a trade right here on a 300k account because ETF, by the way, no affiliation or anything, but they had such a crazy deal that it was a shame not to capitalize on that. And that's something I'll talk about in the guide as well, where a full funded guide I will not release just yet for futures because I have not gotten funded yet. So that doesn't make sense to me. Not gotten a payout yet or anything. So once I get a payout from a funded from a futures prop firm, then I will create a funded guide on that as well. In the meantime, I will create a guide though, when you are looking to trade futures instead of Forex a little bit more, or you're trying to switch between them, which I'm doing because I'm not leaving behind Forex, by the way. It's just in my current time zone as well, since I am currently in New York local time, it's a lot different. And trade frequency was already, of course, not a lot, but even with the current state that I am in, which is the time zone, the trade frequency goes down a lot. Because when I wake up essentially and I look at the chart, London is definitely already over. New York is also almost over. So I would always have to refer to futures. And let me go over the trades actually that I took yesterday right there, which I took 2 trades. And one of the trades was on a different account, it was a 100k account actually that I have with Apex, which I also bought. And that was on NASDAQ. And the other one was right here on ES, right here. And by the way, for some reason, I'm not sure why, but for some reason my executions aren't showing on the actual chart, which on the day itself, yes, but I have everything on right there and it does not show. Now with ETF, it's not that crazy because ETF, my account, there was something wrong because I did not receive the other 300k account. So they reset it probably. So the orders are also not showing. I'm not sure what happened, but for the other Apex account as well, it's not showing for some reason. The executions, the actual arrows right there. I'm not sure why, but on the same day it is. But on the day after, it's not anymore. Once the market closes at 4 or something like that. So right here, let me show you. We were likely to continue higher right here. Well, likely it was, again, pretty 50-50 until that moment in time. Right here, let me delete everything. Perfect. We had this 4-hour value gap right there. And we also had this 4-hour value gap. Now, the only thing that we have below that is as well a weekly value gap that we had a sting into right there. So we can either continue lower off this 4-hour value gap or continue higher off this 4-hour value gap. So then it becomes a question, all right, how do we want to actually play this? Well, right here, we failed to create a new 50-minute value gap lower off that right there, which to me indicated, all right, we might want to continue higher, but I want to continue, or I want to take a trade right here, especially in these conditions when we are stuck between those two PD rays, essentially. I want to take the trade when there's absolutely zero resistance left. So right here, at that moment in time, when we come back above this high, there's no resistance left anymore. So on the 1 minute right there, let me show you. On the 1 minute right here, eventually we got these fair value gaps right there. And that last fair value gap right there, which we closed above the second candle high right there with the third candle, which to me shows, all right, we might not want to trade back into that fair value gap. So my execution was on this candle itself, stop loss in mind. Below those lows, I want to get out right there. And I just want to capitalize on the last move, which my take profit was that high sitting right there on ES. So it was short trade like this right here, which I put 5 minis on a 300k account, which for ES was not a lot, to be honest. Was just not a lot. Was, well, relatively seen, of course, with $500 profit right there. Was just moi. Was okay. This NASDAQ right here, NASDAQ trade, very similar trade, which we already talked about actually. Right here was, where was it actually? Let me see it clearly. It was the same situation. 4-hour value gap, the gray box, 4-hour value gap, gray box, 4-hour value gap. This gray box is a 15-minute value gap right here, which we are coming off of right here. So if we want to reach those lows, then I want to wait for every rejection to have already played out right there to potentially continue lower. So here we have the ST right there coming into that order block, which we get a rejection from, so the retracement. After that, we get a new fair value gap lower right there, which to me indicates that the rejection is done and we can now confidently continue lower. So right here at that moment in time, once this candle was actually forming, I was pretty confident in the next candle not trading back towards this low and preventing a fair value gap. So I already wanted to execute in this candle right there. I'm not sure what my actual, I think it was 29, something like that, 29.75. For the other one, I do have the executions actually, but I would have to switch accounts, which I currently can't do. So right here, that is where I executed, and it was 3 minis right there. 3 minis with the stop loss being, again, these highs overall. If we started to disrespect those values right there, then I would have gotten out. Then 3 minis continuing lower right there with 2 minis taken off once we reach those lows, which I targeted the bodies first right there. 2 minis taken off right there. And then the last mini for if we do want to continue lower, because sort of a dominoes effect is being created right there, where if we want to continue lower here, then there's no real discount rate except for the order block that we had right there, preventing price from continuing lower. So I wanted to leave 1 mini in just in case if we do want to continue lower aggressively and we never decided to return anymore. Where is my entry right there? That is where I had my buy stop, so my break even eventually. And then once we came right there, that is where I have my buy stop currently right there at these highs and slowly trailing lower. So if we do want to retrace, it was at 0.4, something like that. Where if we do want to retrace, then I want to get out right there, because then I think we are not continuing lower. We have respected the fair value area currently. We should just drop lower, which eventually does not happen. So this again, overall leads to the understanding as well. We're not offering fair value, so we are targeting liquidity right here. So I wanted to actually get involved in this move higher, but did not manage to do so right there, which was very nice actually. I got too late right there. I saw these candles happen. I wanted to get involved, but I was too late and we already reached the highs. So those were the 2 trades I took right there. It's very interesting actually. It's very nice. I like this. I fell in love with it. The futures right there and trading it like that. It's a whole new experience and it's very good. Very good actually. I like it a lot. This is a very interesting point right here. Currently, we can confidently say again, this might be a sweep. This might be a sweep. So ideally in 8 minutes, if we have this 50 minutes for value gap right there, we want to start disrespecting it. So again, lower time frame seen by the rejection to then continue higher eventually, and or we will just create a 50 minutes for value gap, confidently continuing higher right there, which will also be quite interesting to continue higher off of. LR stands for low resistance liquidity run. And I also refer to it as no resistance. So when there's no resistance left anymore and we don't have any PD raise where we can potentially reject off of, that's exactly when that low resistance liquidity run or the no resistance happens. If you're able to cover practical tips in the Forex to Futures guide video on TradingView and TradingView trading futures that you find useful, it would be really nice. Yeah, I found some very interesting tips actually. Well, especially if you are coming from Forex to futures. One tip I already share right here. Of course, I'm not trying to gatekeep them or anything because that wouldn't make sense. But one tip is I made a mistake. As in, the mistake I made was starting with a 25K account actually. And what I mean by that is it's the opposite of Forex, where I went in with a Forex mindset. And in the Forex mindset, if you are trying to get funded, start with the cheapest account, start with the smallest account. It's the easiest to get used to price action because you can just simply risk whatever you want with the cheapest account, etc. It's just the easiest. Where in futures, that's the exact opposite because the 25K account right there, that limited me a lot because the minimum I can risk actually is 1 mini, meaning that I am very limited to my overall drawdown. For example, if I take a trade right here and I want to take a long right there, then every tick value, so every tick movement, the smallest movement here on NASDAQ is $5. If I want to cover these lows, then on 25K account right there, I am in 500 drawdown, which is a lot. That's a huge amount for the 25K account because the maximum loss right there is 1500 as well. So that makes it very difficult where you need to be extremely accurate and you're relying on those low resistance liquidity runs and those no resistance runs because otherwise you just can't handle that drawdown with that account. So that is where I would almost advise go with something like a 100K account if you are starting out. And futures prop firms as well, it's crazy because the discounts you get is absolutely insane, which also led me to believe that if you truly want to leverage prop firms, well, I don't want to confidently say it, but I feel like futures prop firms almost might be better. If you look at your ability to trade and you can truly trade, etc., then the amount you can leverage on a futures prop firm is better than a Forex prop firm. Because Forex prop firm, you might pay for a 300K account, I don't know, what is it, $1,500, where for the 300K accounts I bought right there, I paid $65 a month. That's a month, yes, but then I have almost a whole year, or well, even longer than a year to potentially make any profits on the 300K account. If I do not, of course, need to reset it, come into drawdown, etc., I blow it. And that monthly payment right there of $65, that's nothing compared to the overall profits that you can make. Where on Forex, that's just a lot worse, where if you want a 300K account, that's $1,500 on the line actually, which is a lot more in comparison. So again, you of course need to know how to trade it right there, which is also with the drawdown, etc. It's a little bit more risky. So that's the thing, but it's also a lot faster overall. So a lot of discoveries, a lot of interesting discoveries right there. Very interesting. Yeah, actually the Apex account, and the Apex account I bought for 100K was cheaper. Believe it or not, the Apex account I bought for 100K was cheaper than the 25K account I bought as well with Apex, which is absolutely crazy. But yeah, it's absolutely crazy. And to be honest, the drawdown I don't really find it very annoying. It's all right. I thought it would be more annoying, in my opinion. I thought it would be more annoying. What is 1 mini? Well, that's, you're asking the wrong person, but 1 mini is essentially one contract. So you can compare it to one lot size in Forex. So for example, it was so cheap. Yeah, it's extremely cheap. And by the way, it's not, I'm not trying to get everyone over to futures. Don't get me wrong. Like if you're, yeah, everyone is getting excited. Let's go for futures. No. But it's not a gold mine. It really depends on overall how you trade. But if you have been trading Forex for a long time, then futures is almost like a whole new fresh air. It's like a whole new world. It's very refreshing actually. It's very nice. I like it a lot. And I'm not sure why I didn't start early, but after 4 years, almost 5 years of trading Forex right there, and then when you then start to switch to futures, you have no spreads. So you get filled immediately wherever you want. That already is absolutely insane to me. The prices of those challenges are so cheap. It's like all these things. It's like what? It's like crazy. Yeah, you have no spreads. There's no spreads. You get filled exactly where you want to get filled. So of course it's you need to get used to it. So there's also different things. For example, if you are looking to swing trade and you want to execute on the 50-minute and the 1 hour, I would advise go for Forex, because I think Forex is better for that, in my opinion. Because Forex, you can see it is you can just place an entry, walk away, etc., and you can do whatever you want. Futures, you need to be a little bit more behind your screen. As in, if you are looking to trade the 1 minute, the 5 minutes, very short scalps, etc., go for futures. So it's yeah, yeah, but it's worth a try. And again, I don't want to get everyone on a shiny object syndrome right here, because of course it's not like you just walk into futures and you just become a millionaire overnight. That's not the case. If you can't trade and you still struggle with trading, then futures is not going to fix that, right? It's not going to all of a sudden magically fix that. But if you can trade and you've already proven yourself to be profitable in the past, then and you've been trading Forex for a very long time, then I would advise, well, it's worth it to take a check, at least to try it. Which platform do you use for futures? I use I'm not familiar with a lot of prop firms for futures, so I currently stick to the known ones, which for me was ETF, Elite Trader Funding, and was also Apex. So Apex Trader Funding, something like that. I'm not sure actually on the actual names, but Apex usually has crazy deals. I'm not sure how that is even profitable for them. I imagine a lot of people just buy them, they just blow the account and they buy resets constantly. So that's their profitable business in that sense. So I think that's why they can offer a lot of discounts. But they usually have crazy discounts. So if you buy a future prop firm without a discount, then well. Yeah, variation of shiny object syndrome. Yeah, exactly. So again, like I mentioned, if you still struggle with trading, then futures is not going to fix that. So please do not pick it up like that. But it really depends on your overall situation and the style you trade. Like Elastic mentioned as well, it really depends on the style you trade as well. Can you use a free version of TradingView to link your future account? Yes, you can. Yes, you can, Rumba. I believe you can. Yes. Only thing is, if you are trading, which most futures are NASDAQ and ES, then you would still have to go for the CME package. Because either you pay that on TradeAvate or on TradingView, which I do not pay extra for CME package, only through TradingView right there. I started on futures, went to Forex, and now I'm back to futures. Yeah, I screw Forex, I'm out. Yeah, again, it really depends, and I like to switch them. If again, I don't want to create the wrong impressions right here, and I feel like I have a lot of responsibility in that as well. I want to make very clear that I'm going to futures because I always wanted to try it out. So I just dove straight into it. I am making money from Forex, so there's no reason to move away from Forex as well for me. I have obligations in Forex that I just need to sort of, that I actually need to trade as well. So I'm not stepping away from that. But as you may know, my trade frequency was already low. Since I'm in Colombia, my trade frequency is even a little bit lower than before. So futures just had the time to shine in that sense as well. Where 3 p.m., for example, the power hour is perfectly fine to trade right now because it is actually 3 p.m. for me. Where in Amsterdam, it would be like something like 9 p.m., which is just not, I'm not going to trade 9 p.m. I don't like that. I don't like trading in the evening after I just done a whole day. So it's a whole situation for me as well. And again, I would advise, really dependent on your style as well, depending on what you're comfortable with. But how do I say that perfectly? Is if you've not found profitability in either one, then it doesn't make sense to switch. It doesn't really make sense to switch. Overall, yes, of course, you can try the other one. Like, don't get me wrong. I don't want you to feel forced that no, don't try the other one because you're not profitable in the other one. Because it might just be Forex is just nothing for you, and you do like futures better. That of course that can be the case right there. But it's very important to understand that I don't want you to combine them as well, like I'm doing, because if you have not found profitability in either one, then combining them will just do nothing good for you. So either try the other one and make the switch, but again, it's the same with every trading plan. Stick to it. We want to stick to it. That's very important as well. So just your disclaimer. I had to make the disclaimer. I had to make the disclaimer as well. That I do not want to feed onto any shiny object syndrome that we might have right here, because then it's only going to disappoint. When expectations are very high, then the only thing left is disappointment. The drawdown is for unrealized PL, which can be very fast to hit. Yeah, that's true. That is true. That's the only thing that's you need to take it into account. 100%. 100%. Ah, perfect. Sir Pickle knows the best. That's our futures guy right there. Apex, ETF, Top Step. Consider those the big three of futures props. Thank you, my man. Thank you. Perfect. Let me see. We need futures funded guide ASAP. Don't rush me. I first need to actually get funded, get a payout, and then I can make a funded guide. Otherwise, it doesn't make a lot of sense to make a funded guide. They charge activation fees also for the funded. Yeah. If you get familiar with it, with the rules as well, then it's a great thing to do. Heavy NQ candle. Yes, to get back to this really quick, because I saw it happening right here on the background as well, is after this right here, we had an up candle. We saw this candle was an up candle forming actually. And when we then came back below these lows, that's exactly the indication again that we want to actually continue lower, which is a little bit earlier seen by this liquidity sweep right there as well. So now a 15 minutes VWAP going lower would, I would then prefer lower prices, unless we all of a sudden start to reject again to continue higher overall. Then we would again react to that, potentially the 1 hour VWAP right there, which we can continue lower from. But overall here, lower prices for a while could be nice. I say that, but ES is still in that 50-50 area. So ES right here, I would still want to wait. Still want to wait right here. Which, if ES wants to continue higher and Nasdaq wants to continue lower, that worries me a little bit. Because then I would be worried about a rejection here on Nasdaq. Where if we start to disrespect any fair values right there, then we can still look to continue higher overall. And then this might just be one big manipulation move to then continue higher the rest of the day. It's very important to understand as well. Look at the dollar. It's continuing lower right here. And I think we can confidently say that we are disrespecting this. So here, if we now have values going lower as well, then that could be the target right there. Those lows. Let's see where you can get the discount for the challenge. For Apex, it is on the website itself. It's usually on the website itself. Apex and Elite Trader Funding. Elite Trader Funding has an anniversary deal, so it's 80% off, I believe. Yeah, 50K for 15 US dollar. That's, I don't know, that's so crazy, especially when you're used to Forex prop firms where 50K for 15 US dollar. Of course, the drawdown, etc. is different. Yes, it's overall different, but if you can trade, then that doesn't really matter, as in the trading drawdown, etc. Like that will be fine. And even if you blow the account, then you can try again and again and again until you might arrive at the 250 to 300 US dollar you might pay for an actual Forex prop from 50K. So that's crazy. Absolutely crazy. ETF 90% for today. Absurd, dude. That is crazy. That's even crazier. 90%. Yeah. That is crazy. Wow. Let me see. Almost sounds like I'm almost sounds like I'm pitching something here, but believe me, I'm not. I'm not. Yes, correct. ETF is Elite Trading Funding. Yes. Believe me, I'm not pitching anything here. I love Forex still. I love Forex as well, but I'm just switching currently and I'm just telling you my experience. Let me see. Forex in London, future in New York. Yeah, that's also a discovery I have made a lot where I can tell you how you should trade based a little bit on the time zone you are in. So for example, if you are in New York time zone, or even worse, Los Angeles is even worse, so the West Coast, then I can commonly say I would advise futures. And the reason for that is because you are going to be reliant extremely on the equities open. Even equities open for the West Coast is early. So equities open and later during the day, etc. So that's when Forex, there's just really nothing to do. So if you are on the east side though, and the other side of the world, depending on how far you go east, of course, but that is where Forex can also still be very nice, because you can trade London and New York. So you have best of both worlds, where if I wake up, I already missed most of the day for Forex. So that becomes very difficult to then actually actively trade Forex as well. Yeah, Sir Pickle's the plug. Oh, yeah, yeah. Yeah, Zach is as well. Zach Nation in Discord here is as well a moderator actually in ETF, so he knows a lot about ETF as well. So if you have any questions, well, please don't spam him. Don't tell him I send you before he gets 1,000 questions, but he can help you in that as well. Ario, I love Forex. Also, Ario talks about futures for 20 minutes. Yeah. Exactly. Yeah. How are you overall enjoying Colombia apart from trading? Let me actually pause the recording as well for people that are not interested in all this. But again, all right, if GBPJPY goes to that 4-hour Vega, would you still be interested in shorts? Yes, that's a great question. That's actually a really good question, because if GBP right there, JPY, goes to that 4-hour Vega right there, for me, that is too big of a retracement. So either it's currently this order block right there, and the 4-hour Vega below that to continue lower off of that. But if we reach this 4-hour Vega right there, then again, it becomes the same question where we swept these highs right there, and we are not sweeping that anymore, because it's that liquidity story that we talked about earlier in this session as well. So this 4-hour value gap, if you reach that, I would not be interested in that anymore personally, unless then it is the case again where that area is where we have enough space to create a new 4-hour value gap lower actually. So then the 4-hour value gap lower would actually come to mind again. Then for NASDAQ and ES right here, let's also go over crude oil actually. For NASDAQ right here, I'm not too convinced on lower prices. In all honesty, I want to see what we want to do right here. Do we want to disrespect this 5-minute value gap right there? Do we want to create a 50-minute value gap higher right there? It becomes a lot of reacting, which of course is also a bit of a shame, because it would be ideal if we already get the price action we want to see right there, which the price action we want to see is a 5-minute ST like we are currently seeing, then a new re-higher off of that, potentially a rejection right there. But once the rejection is gone, we get closer to those highs. This is where the no resistance happens. So where I would like to get involved eventually, potentially as well later today. So that could be very interesting. If we get lower prices, then I would want to see, again, new fair value gaps going lower right here. 15-minute right there minimum. This 1-hour value gap right there is not enough for me. As long as we do not close below that low, this is not enough for me right there. So I'm still leaning more towards higher prices overall right here. Unless we get proven wrong, or I get proven wrong right there, and we start seeing the lower prices. Right here, if we come above those highs right there, ideally I want to see new 15-minute fair value gaps higher right there, closing comfortably above those highs as well. If we start to get, again, same story, start to get bearish fair value gaps, start to confirm bearish order flow right there, then I want to look at potential lower prices. But in the meantime, I still want to look at higher prices right here. I'm again leaning more towards the higher prices. Crude oil. All right, perfect. Then we had the rejection right there that we talked about. Eventually, we see the same thing happen over and over and over and over. And once you start training your eyes to see this, you'll see it a lot. The rejection right there happens again. Once we then start to trade back above this candle high right there, what happens? We can then look to target comfortably the next premium rate. So on the 4-hour value gap has been reached. We have the breaker sitting right there actually, that we are currently reaching right there. So that is where how you can trade between those constant rejection phases almost. And on the 1 minute right there, let me see, this is then the rejection right there. This is where the low resistance again happens. Same situation that we had right there. And that is where we can eventually continue higher and higher and higher, with the next rejection area potentially being this one right there. So that's very interesting price action overall. I do quite like that. Very interesting. And for here, we can just do this until, of course, we have the same situation where we arrive at these highs right there. And we need to take into account any fair value gap that we are creating right there, that we can have a retrace into that to then continue higher off that. So keep that in mind as well. All right, that is the session for now. Let's see if we have anything else to talk about, but the trading here is over. I wish everyone a great day as well. Thank you for being here, and then I'll see everyone at the next one. Thank you, thank you, thank you.